If you're interested in investing in NDIS property, then today's video is all about the things I believe you should be focusing on and others that you should really consider before you go down the track of actually acquiring a property. There's a lot that's happened over the last year or so, and there's a lot of lessons that we've learned in investing in NDIS property over that time and assisting clients to acquire property. And therefore, today's video is very important, I believe, in making sure that we've got a process that will end up giving you those results that we're after and the NDIS investment properties can deliver if done properly. Hi, my name's Tim, Think Property Business. So again, today's video is all about NDIS investment properties moving through 2022, and a lot of what I'm going to cover off today is some of those key components that, if not done properly and correctly, then can really make the outcomes not as attractive as that we hoped as investors. So it's important that, like with any process, I think I mentioned before, that we get it right, we understand what needs to happen in what order to ensure that we are going to get these positive outcomes. And it really can work. We've made it work. We've helped over 100 clients this year acquire NDIS properties, and they're getting through completion and having participants occupy the property. So the system does work, but again, it needs to be done properly and approached properly. And a lot of that comes down to the understanding of who to use, what works, what doesn't, those sorts of things. So let's get going in this video, and I'll cover off those things that I think are important to make sure we get a successful outcome. So the first one I'm going to cover off is SDA, so Specialist Disability Accommodation. So these companies form basically a license to work with not only participants but also help the care providers put the paperwork through, and again liaise with the NDIA or the NDIS to make sure that the process runs smoothly. Now, it's become very apparent that if you don't use an SDA that has experience, that is a large SDA, I mean a company that basically has a lot of contacts, multiple SIL providers as people or companies that they work with. SIL providers employ the carers who obviously take care of the people with disability, participants who end up occupying the property. So if that relationship's not strong and you don't have, again, an SDA that has the experience, the understanding of what needs to happen, and also too those participant pathways with multiple SILs, then it can be a very, very tough process to actually have participants occupy the property. So be aware that when you're acquiring a property, you really want to make sure that that SDA is lined up, or SDAs are lined up to start with, and not something you need to track down as the property is getting constructed or at the end of the construction, even worse. So that is a very key process to make sure we're getting the right outcomes, and it needs to be, or the engagement needs to be early on and understood what that looks like early on before you start constructing a property or acquiring a property. So it's important that that SDA component is sound, and you tick the SDAs tick those boxes. You really don't want to work with SDAs that have only just basically become licensed, may have been a property manager, now have a license to act as an SDA. That's well and good, but if they don't have those contacts and those the understanding of how the industry works, because it is a complex thing. There's a lot of paperwork involved. It's a government scheme, so it's not just handed to anybody. There's a lot of qualification, a lot of paperwork to be done. Again, if that experience isn't there, the understanding of how what that needs to look like, then again that can be troublesome and can basically, at the end of the day, determine what the end result's going to look like for us as investors. Again, without participants in the properties, you're not getting any income. So we need to get the participants in. We need to have that understanding and that relationship with the people who actually facilitate that. We can't do it ourselves unless you're licensed. You can't do it yourself. So it's important that that is understood by investors, and you know, again, what that looks like before you get too far down the track of acquiring an NDIS investment property. The next one I want to look at is the specification. So right now, if you're building an NDIS property, to gain certification, it needs to be built to and constructed, and inclusions and specifications based on the NDIS 2021 specifications. Prior to the financial year last year, so 1st of July last year, prior to that, the old LHA guidelines were acceptable. So the reason for outlining this today is that if you see a property that's vacant and is being built to the old LHA standards, then you want to be very, very careful around what that's going to look like for you as far as attracting carers and participants to that property. it may be that legally they actually can't occupy the property because it doesn't qualify anymore, depending on, there's a few things that play out that scenario. But again, at the end of the day, you need to be very, very clear and understand exactly what that looks like for you. You don't want to buy a property that you cannot lease out to participants, and you won't have carers looking to engage you or that property to accommodate the participants, and SDAs won't manage the property on your behalf either. So that's very important. So the old LHA guidelines are gone, a thing of the past. Everything needs to be constructed now to the NDIS 2021 building specifications, and if that's not the case, then yeah, be very, very nervous and be very guarded around what approach you take to that type of property. So make sure that it is built to the current NDIS specifications before you get too far down the track. Okay, leading on from that is established properties, established SDA or established NDIS properties that don't have participants. Now, there are quite a few around. You need to make sure that if you are going to acquire an SDA property that's completed, that doesn't have participants occupying the property, that you understand exactly what that looks like. There's a lot of reasons why they can be vacant. They can be not well presented, as in the size of them, the layout, the ability for participants to move around, the ability for carers to actually provide that level of care that participants require in the space that's been allocated or provided in that construction of that property. It could be that it's located in an area where there aren't any participants. It could be that doesn't actually meet the NDIS specifications and therefore hasn't been granted NDIS certification. So all those things can play a part as to why the property is vacant. And the last thing you want to do as an investor is acquire property that looks like that at the end of the day. So ensure that if you see a property that's been advertised, SDA property that's been advertised that is vacant, advertised for sale that is vacant, then yeah, either walk away, ignore it, look for something else, or ask a lot of questions as to why that is the case. So any vacant SDA properties that are completed, established, yeah, you want to understand what that looks like before you get too involved with that type of investment option. The other thing we're seeing quite a lot, properties that are advertised, NDIS, SDA properties that have been advertised for sale through various websites, etc., where they are advertised as high physical support or built to a high physical support level or suitable for high physical support participants. And as soon as you look at them, if you've got a sort of educated eye or understand what it looks like, you can see straight away that there's no way that you're going to get a high physical support participant in that property. And so just be careful of what it's, if you're looking at one on a website that's for sale, you want to make sure that you are getting what they basically advertise it as. And again, you don't want to end up with a property that you do calculations based on returns, and then you find out at the end of the day that you just no way you're going to get those returns. You can only get those returns based on the category of participants that occupy the property. So there's a bit of homework to be done there and ensure, again, that it's not sales talk, if you like, and you're getting overpromised on what you can, or what type of category participant can actually occupy the property. That can be very scary at the end of the day. It may mean that the property doesn't cash flow anywhere near what you calculated and expected. And again, if you spend a lot of money on that property and you're not going to get those returns, then yeah, that's not the result obviously that you're after. So just be aware of that. Make sure that you understand if it's categorized as a certain suitable for a certain level of participant, that's exactly what it's been built for, and you know that you're going to get that category of participant occupying the property. Now, unless you've been living under a rock or you've been on holidays to Mars for the last year or so, you're going to be very aware that we're going through, and it's basically been stated that the property boom, the national property boom that we're experiencing now, is the second largest that the country has ever experienced in its history. So there is a huge demand from everyone, first home buyers, investors, upgraders, you name it, everybody who's anybody wants to get a share of a piece of the pie in this property market. Now, what that means obviously is that there's more demand than there is supply. So that's had a knock-on effect to the availability of materials, skilled labour, available land. There's a lot of things that are challenging us, if you like, and it's not impossible, but definitely it is something that we're working through, where just being able to compete in the market, and for us, if we're looking to build an SDA property, then the land that it's built on, or going to be built on, needs to meet certain criteria, and that's there's more things that needs to stack up with a block to build an SDA property versus just building a traditional property. So when we're looking to acquire land, we've got to understand this point in time that there is, again, a lot of demand for the land, and therefore sometimes we actually got to wait a little while until that land actually registers, because there's a lot of new developments happening. But again, because of that strain on materials and labour, sometimes those the estimated time that land's going to register a title is actually, it blows out a little bit, because again there's a number of those factors, but also too the weather. We've seen a lot of parts of the country where we've had a lot of rain, and which has also slowed things up. So just be aware of that if you're looking to acquire an SDA property through Land and Build. That sometimes you have to wait a little bit, and the other one is too on the build time frames. Prior to the boom, you could build a property in 6 to 8 months. Now it's gone past that. It's probably closer to 8 to 10 months, even a little bit longer, depending on where it's located. So at the end of the day, if you're patient and you're willing to, and you understand what that looks like, you'll get paid back in spades if it's done properly. You will definitely get a massive return on your investment. You just, again, as investors, we just understand sometimes there is, it's not just like buying an established property and then you're in it and tenants are in it within a couple of weeks. It's a government scheme, as we've spoken about, but also too with the nature of the strains on a property market as we're experiencing now, means that there's some other challenges that we have to work through. But once that's all understood and you know what that looks like, again, in 5, 10, 20 years down the track, when you've got participants occupying the property and you're getting those returns, you'll forget all about the little wait that you've had to have before having the property completed. But certainly it's worth understanding that that's something you may have to work through as an investor. Another one I just want to cover off is finance. I've worked with a lot of clients who've gone to their current or the broker, financial professional they've been using, and only to come back or to go away effectively even and say, well, I'm not in a position to actually buy an NDIS property. And a lot of that comes down to, as I've covered off in other videos, but it's still very current today, is that you really, really want to use financial professionals who are experienced with NDIS funding. There are some lenders, again, that just will not take security over an NDIS property, which means it doesn't matter how good the person you're dealing with is. If the lender doesn't have the lender's policy criteria for actually providing funds against a certain type of property, if that doesn't it doesn't include NDIS property, then it doesn't matter how good the person you're working with is as far as the loan manager or the broker. The fact is that it's just not going to happen. It won't get past the credit team. So at the end of the day, save yourself a lot of time. Really understand where you're at in the position as far as being able to acquire finance for the funding of an NDIS property. And again, it's important that you use financial professionals that are actually experienced and understand what the process looks like and has the products that will actually suit an NDIS property finance or loan. So you save yourself a lot of time messing around with people who are not sure what they're doing or just don't have the access to those lenders that actually provide finance or funding for an NDIS purchase. Well, I hope you found that video helpful. There's a little bit to think about moving through this year into future years around investing in NDIS property. Very exciting times and it's all positive, but just a couple of things to make sure that you get right before you get too far down the road. If you're interested in obtaining a booklet on the NDIS investment opportunity, I'll leave a link in the description box basically, and you can get that emailed out to you. It covers off the NDIS a little bit, and also too how I can support you as a client if you're interested in that. Also too, I'm very excited that I'm going to be launching very soon a membership group, an exclusive membership group, NDIS Invest, and that'll be via my website. If you're interested in obtaining details and information on what rewards you'll receive, the type of content that you'll have access to, then again in the description box I'll provide a link to the booklet or the handout, if you like, that will run through exactly what that membership group will look like, and again what you can obtain from being a member, or the benefits of being a member, if you like. So look, really appreciate you sparing some time to watch this video, and I look forward to seeing you on the next one. Take care.